On church bells.
Hello, 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 everybody. I am Rosalind Brown with Your Wealth Guidance, and thank you so much for joining us tonight for another Great Money Monday. As always, our goal is to provide you the tools so you can create your own financial independence roadmap so you can live your life on your own terms. And so, one of the big things that is a roadblock, a headache, all of the above. I don't know anybody that is excited about paying taxes, about tax planning. People are happy about a tax return, but they like, dang, I mean, I didn't get that money throughout the year. So we have somebody here. And it's not even just simply about taxes, but as you all are planning. And so, especially for the last few weeks, we've had a few people. Last week we had Jay that was in Barbados, and we've had people that are in Mexico. And so as you're planning and you're thinking about, can I move? What impact does that have? Does that mean I get a chance to run away from Uncle Sam? We have an expert to answer some of those questions because that might be your way to escape the rat race, to get you some peace in your life, and to have financial independence. So we have Sandra Morno, and she is a master tax strategist, an IRS enrolled agent, and a numbers geek at heart. Although she usually resides in Miami, Florida, you may find her roaming the world as a digital nomad. So she knows. She actually stumbled into working in this industry after helping a friend out while she finished up grad school. She has made it her mission to make business owners realize that having a relationship with their money is critical to success and longevity in business. She now focuses on empowering women of color, the service based businesses, on how to level the playing field using the tax code to maximize their tax savings so that they can do more things that bring them joy and peace, like traveling. Hey, that's right up my alley. So she does this with her year-long service, so not just tax time, that educates clients on how to be strategic and maximize their tax savings. Sandra understands the journey and takes it with clients all year long. She develops custom tax strategies and tax planning to ensure her clients are taking advantage of all their tax savings. This also removes their anxiety around taxes and, most importantly, gives them a sense of peace knowing that someone has their back where numbers are concerned. Hey, we all need somebody to have our back when it comes to tax time. So we got a few people. Dee, she said she leaving in 2 months. So Dee, you almost there. Hey, Blackson, excited to hear this conversation. We got a few people checking in. So happy to see you all. And so, Sandra, I mean, tell us a few things, especially for Dee. She's moving in a couple of months. Like, there's some of the things she needs to be aware of.
Oh man, well, first off, where's she moving, and is she a business owner? You can't escape taxes, y'all, unfortunately, but you can lower them, and there's a whole bunch of credits out there that can help you do that, right? I think everyone knows about the foreign earned income exclusion credit. So you have to be outside of the United States more than 330 days. Like, I tell people, don't push it. Make sure you're closer to that 365 than that 330, because like if you're en route or in transit or in flying mode, that doesn't count, and they will make sure to track you on that. So you want to make sure that you're out of the United States basically almost a year. And that's what I'm trying to do this year, but I don't know if it's going to happen because I think I'm already at like 29 days in the States, but that's the goal.
Girl, don't come back.
My mama, her birthday,
Right.
family.
Fly her, be like, meet me at the border. And Dee, she says she is okay. So she just quitted her job and she started a small business.
Okay.
Now Blackson is moving to Portugal this fall. Girl, it's a whole gang of folks in Portugal. I'm
Yes.
like, all
I
right,
know.
I hung out
I
there a
need to
couple
go
of
visit there.
times.
I need to get there. I need to get there. I've heard good things about it.
I know Portugal's the new Atlanta at this point.
I don't know if you want to compare the two. Oh my goodness.
Now, especially so if you're a new business owner. So in the case of Dee, so Dee is moving away. She's a new business owner. What are some of the things that she should be prepared for, that she should be thinking about? I mean, you hit the 330. So D, make sure you got to see your mom. You got to put your 1 week that you're gonna be in the States around your mama birthday.
Yeah.
But everything else, oh well, you'll just have to hop on the Zoom birthday parties, I guess.
Yeah. Well, I mean, she definitely wants to start the business just the regular way, like if she was still staying in the States, right? Get everything in order. You start the business, get that LLC, get those business bank accounts, please. Don't use your personal bank account. Get an accounting system, right? So there's Wave apps. That's what I tell people. It's absolutely free for your accounting. You don't have to go QuickBooks route because QuickBooks can be a little overwhelming for people. Let's just say that. And let's see, just keep track of everything. Work it just like you were still in the States, because that's how they're going to treat you. As long as you're a U.S. citizen, they don't care where you at. The U.S. going to want their money. Listen.
And so I know some people are like, listen, I'm gone and I don't ever plan on coming back. You can have this US citizenship. Does it make sense to give up your citizenship, or does it
No,
make
no,
sense
no.
to keep it?
No, don't do
Even
that.
if you
Keep
never
it.
plan to return.
Yes, keep it, because there's so much power in that citizenship, right? If something were to happen, and God knows what can go down, that U.S. citizenship gives you some leverage. Like, I've had people tell me, as soon as someone finds out they're a U.S. citizen, they treat them kind of differently, right? So you don't want to kind of be a local. You want that power in hand. And when it comes to like your taxes, you just got to find someone who's going to be able to help you all year long to keep it as minimal as possible, so you're not overpaying the IRS, because you do want to put something into the system, right? You want your social security, if it's going to be around by the time we're retired, we don't know, but you want to put a little bit of something in the system.
And then I know we were talking before the show started. The great thing about hitting that 330 number is not paying taxes on a significant portion of your income. Tell us a little bit more about that. I think that's probably one of the bigger benefits.
Yeah, so that's the foreign earned exclusion, income exclusion. God, FEIE. So if you make up to, I believe it's 120,000 this year, and you're out of the United States 330 days, you can actually apply for that credit. So there's two ways of doing it. It's the physical test, which is the 330 days, or the bona fide test. Now that one's a little harder because it's a year and you have to be in one place. So for someone like me, that's not going to work because I'm bopping around way too much. And it only covers W-2 type income, earned income that you actually work for. So it wouldn't be social security, it wouldn't be investment income, it wouldn't be rental income, because that's kind of passive. And even you as a business owner, that part, you can actually write that off. Unfortunately, they still get you with the self-employment taxes. And that's when you have to really kind of work with a strategist or someone else to help you with that part, so you're not getting killed on the self-employment.
And see, I think that's a really good point or thing to think about, because we had some questions that were dropped in the chat yesterday. So Maya, she says, filing taxes as a self-employed person, sole proprietor. She said she's getting suggestions to underreport or have a bunch of deductions, but she needs to show income in the long
Right.
run because she has no pay stubs or any way to prove that she's actually making money. And so what should she do? And I think that's kind of probably very typical, where people are like, I'm write off everything. Um,
Right.
and then if they need to show income later, it becomes more problematic.
Right. It's like she has a goal, right? She wants to show income. So she's going to have to get some type of an accounting system. That's how you're going to track your income. Like, how do people pay you? Are they paying you through PayPal, Cash App, Zelle? You need to just gather all those things into one accounting type software, so that way you know what you're making, right? And now you can do your expenses, and you can kind of see what your net income is looking like. So unfortunately, if you are self-employed, it's like a catch 22, because you want to get a house, but then you're going to owe like $20,000 in taxes. So the way around that is, like I said, working with a tax strategist, working with someone who's going to show you some strategies, show you how to hire your kids, show you how to write off certain things legally, so that it helps you, right? Because in taxes, it's not about how much you make, it's how you make it that determines how you're taxed.
I think that's a really good point. And so Dee asked the question, she said she's moving mid-year. Would
Mhm.
the foreign earned income tax credit apply to her?
No.
So she's gonna have to wait till 2024. But that's okay.
Pretty much, but still go. Don't stay. Like, please, still leave. There's some other things that you can use to help you with your taxes.
And so, what are some of those other things? I know one of the big things is if you're on social media, people talk about everything that you can write off, like everything under the sun. You know, you writing off every single dinner when y'all out with your homegirls. You writing
Mm,
off makeup because you took, four Instagram pictures with it. What are some things
mm.
that you can and can't write off?
so see that see that gets weird. It all depends on your industry, right? So if this person is a makeup artist, then yes, they can write off their makeup. But if you're just an average Joe and you're getting on Instagram and you bought some makeup to look some type of way, no, that's not that's not a tax write-off. Unless you're labeling it under something else like supplies, which I would highly not do. Because if you're audited, then it's not a fun thing. But like the standard things, right? The car expenses. If you're driving to and from, you can do the mileage or you can do the actual expenses. A lot of us drive a lot. And so when I say actual expenses, I mean everything up under the sun that you can think of for your car. Like you got your tires changed, you got your car washed, it's in storage, your insurance, depreciation, like tolls, parking, all those things can be added in and actually written off for your car. A lot of people know about hiring their kids, and it is a real thing. I had someone ask me that today. She was like, "Is that real?" I was like, "It is. It really is a real thing, but you have to make it a real job. Don't just be hiring your kid or paying them money and they're not doing anything for you." So I tell people always have some type of a paper trail. Like you create a W-2, you give them a stub, you open up a checking account, you have what they do on a weekly basis, and you pay them accordingly. So you always want to have a paper trail when it comes to your taxes. More paper than less. Because if you are ever audited, they're not going to go through that stack of papers. They're going to be like, "No, I'm good. You was right." Like you can take all these expenses as opposed to you having like 2 or 3 sheets of paper. You always want to go prepared. With the IRS, more is better.
Now, that's a good question, especially as people are leaving. Do you see that people that aren't local and in the United States are actually getting audited more often?
Well, so they're kind of far behind right now. So it's just one of those things. The IRS can come back on you 3 years from now, 5 years from now. And so I tell people just always, I'd rather you be prepared than not prepared. Don't throw away those things or upload them into a system. Have them somewhere stored away just in case. I'm dealing with someone who got audited for 2018 and 2019. Well, he's having a hard time finding the stuff that he needs. So we're just like, okay, this is going to be interesting. And he didn't have a bank account. So I'm like, oh God,
Oh
this is
my
going to
gosh.
be, yeah, cash. He did everything cash with receipts. And I'm like, no, please don't do that. Please have a bank account
Ugh.
if you got a business.
And that definitely makes it harder now. I'm anti-cash anyway, but that's neither here nor there. But as we're talking about, can you? So if you're a sole proprietor, should you have a separate card? Should you have a separate account that you can run these things through?
Yes. Yes. And yes. Even if it's just a personal business card, you label it a personal business credit card, do that and have a business account. You have to separate it because you don't want to end up commingling. You don't want any issues. You always want to protect yourself. Even if it's two bank accounts that are in the same name, you just make sure that you know that that's all business. Keep it separate as much as possible.
Now, I think this is a really good question, especially for people who say, yeah, I'm leaving and I don't want to work. So I have saved a lot, I have accumulated some assets, and I just want to just rest. And if you are a Black woman in America, you deserve it. So Tammy asks, she's talking about in Europe, specifically Italy and Portugal, would an expat be taxed on their investment income in these countries and in the US? So she's asking if she'll be double taxed, especially if she's living there for more than 90 days.
Yeah, so with Portugal, it's over 183 days, I believe. Then you're considered a resident. Anything under that, you're considered a non-resident, and they tax you at 25% tax rate, which is
Ooh.
crazy. Yeah, that's what I said. I was like, "Ooh."
Ah.
So, so when it comes to that, if she only has her investment income, then yeah, it's going to be that double taxation. But it's all about that your adjusted gross income, right? So if she has some other things going on and she can take some expenses or she can itemize, that's what's going to help her. So because remember, you're only taxed on that net income. So it's bringing down that investment income. If you have a rental property, right? You're getting that cash, but you have all those expenses. Don't be shy with them expenses. So that's what's going to help you bring down what you owe.
And so that would be big because goodness, that could take away a lump sum. That could take away some of your free time to sit and relax and
Yeah.
enjoy life if you were paying it
Yeah.
in taxes. So that's definitely something to think about. We have a good question, and I think everybody wants to know this. How do you avoid owing taxes? So she's thinking, does she need to open an LLC? And if so, what are some of those do's and don'ts in opening and creating the LLC?
So, as a single member LLC, in the eyes of the IRS, you're a disregarded entity. So they're pretty much saying you are your LLC. There's no real differentiation, right? So you're going to get hit with that self-employment tax, which is like, I think a total of 15.9%. And that's just the self-employment tax. That's not the tax on how much money you make. So when it comes to an LLC, what I usually tell people is start that way. But as you start to make more money, you need to maybe consider the way you're taxed differently, right? So as an LLC, you can be taxed as an S corp or as a C corp. Depending on who you're working with, they'll tell you what's the best way to go about that. I'm an S corp. Well, I'm taxed as an S corp, and so I, of course, have two different filings. Right, I have my 1120S and I have my 1040, and I'm also an employee of my company. So all I show is W-2 income and then the net income from the S corporation. And so that saves me from having to pay payroll taxes, not payroll taxes, I'm sorry, self employment taxes. So that's usually what I tell people. You got to start small. And then when you get to a certain place, then you consider changing the way you're taxed. Because off rip, if you start as an S corp, you're obliged to pay yourself. But if you're not making no money, how you doing that? So they'll give you a couple of chances, but at some point they're going to be like, okay, you
What
don't
are you
even
doing?
need to be an S corp. Yeah, you're not making any money. You're just out here.
And that's a thought too. So, one, where is that turning point? So, you start baking cakes today or selling jewelry or whatever that is, and you're making, barely anything in year one, maybe a few $1,000s in year two. When do
Mhm.
you make that change?
It's all about your net income. What's that net income looking like after your expenses, right? So let's just say your net income is $30,000, and okay, we'll say a single woman because it's different if you're single with kids, married with kids. You have totally different exemptions. So let's just say for a single woman, she has $30,000 net. So that's you're gonna owe about maybe 10 grand on that. So you might want to be like, all right, am I paying this 10 grand or do I need to consider changing the way I'm taxed? Right. I tell people set aside 15 to 20% if you can for your taxes, or just be ready to pay that amount. But usually if you have, like I said, about 20 or $30,000 net, you want to be like, okay, well, hell, I could have paid myself with this and saved myself from paying taxes with the United States. And so that's where, like I said, it comes to you having that right person helping you throughout the year, telling you, okay, it's time to switch. You need to hire yourself, or you need to hire your kids. Somebody need to get hired so we can bring down what you owe.
Now, Dee says she's moving to Mexico. Is there anything special that she needs to consider for that move to Mexico? And I know you're in Mexico right now.
Yeah, Mexico real chill. I mean, it's kind of like the US. Like as far as their taxes, I think it's you'll probably file just one tax return. I'm not too savvy on like what they do here, but when you are able to use the foreign and I'm gonna get that right one time. FEIE. I'm just gonna say that. When you're able to use that, that's what helps you, no matter where you are in the world, because the United States kind of trumps everything else, right? And it's about lowering that income, and then that affects everybody else's income.
And then if you are, so like Dee is going to be in Mexico, but let's say she's going to spend 30 days in a different country. So she's going to stay out of the country the entire 365 days, but never in a country more than 30 days.
That's fine.
Does she need to worry about taxes in those individual countries, those countries she's hanging
She
out
needs
for
to
30
find
days?
out. I don't think so because 30 days is such a small time. It's usually after 90 days that people are like, all right, you've been in my country long enough. You need to run me some money. So, but I think 30 days she'll be fine.
And so that's a good point, especially because it's a difference between people who are just moving. And they're
Hmm.
going to have an actual new home versus people who, like you're just kind of moving around. And I guess it's more so going to depend on how long are you going to make one place home. And
Right.
that determines if you need to actually do tax planning for that entity in and of itself.
Well, I mean, you can kind of just still treat it like you were at home, right? Because like you're still running a business. So I'm still having to pay for certain things that I would have still had to pay for in the States. So I don't drive here, but I'm in an Uber almost every day. So I'm writing that off as my transportation expenses, right? So you just kind of got to think outside of the box. Like you're still running your business, you're going to still have a lot of the same expenses. But just be mindful. Like you said, the other day I was out to dinner with someone and I was talking business. I was like, "Oh, the business card is coming out." Yeah, that was me and Bernadette. I was just like, "Oh, we talked business for like 30 minutes. So the business card is coming out and this is a tax write off." So you just got to be mindful of almost everything you do.
And that's a good thing. So everybody was excited about the ability to write off meals, and then it went away, and then some things changed. How has that changed in terms of how much can you write off while you're sitting there chatting and having business and a good meal versus especially where it was and what we can continue to expect, that kind of thing?
Well, first off, it's not 100% anymore. We're back down to 50%. So that right there is huge, right? So I'm just like, dang,
Not,
now
no
you
more
really gotta,
lobster. You got to come
yeah.
down.
And that's another thing. Like if it's a lavish meal, they're gonna side eye you unless it's like you having some type of a networking meeting or a conference type thing. But if it's just you and you decide to have a $75 meal, what were we talking about to ourselves? Like what are we doing right now? So
Great
definitely
conversation.
you definitely want to keep it lower than higher. If you're going to go high, then you're going to have to show more proof. Like a lot of the times, like how I was taught is like on the back of that receipt, you write who, what, when, where, why. And then you keep it and you upload it to show as proof that that's why you spent that much.
Now that makes a lot of sense. Now, what are some of those other things? So we talked about transportation, of course. Now only 50% on the meals. So calculate that meal a little bit different. You might not want to grab the tab for everybody anymore.
Yeah.
What are some other things that you can think of, especially while you're out of the country? So I'm assuming things like, of course, your cell phone, like internet, like those are kind of givens. But what are some other things, especially as you're out of the country, that people might not necessarily think of?
So, like, if you're co-working and you pay for a co-working space, that's a big thing for a lot of us nomads. We can't really work where we are, so we'll find a co-working space, or you can actually use where you're in your Airbnb, right? Because that's kind of like your tax home, and you can use the home office deduction. So it's just like, okay, this 50 square feet is what I use, and that's what I'm gonna write off. Or we can do it the other way, which is calculating everything that you're paying and taking a portion of it. So you can still do the home office deduction, but be mindful that's only if you have net income, not if you're negative, right? You have to actually show some type of income. Your transportation, your travel, you can write that off certain parts of it. So that's what I do. I write off certain parts of my travel. I figure out like, okay, I'm going here for a couple of days. I'm going to talk straight business. So these next 3 days I can write off. The next 4 days are pleasure. If it wraps into the weekend, then you might be able to write it off on business. So there's a lot of like little tricks that they have in the tax code that you can use, especially when it comes to traveling and writing that off for your business, because that's going to be
Okay,
the
now
biggest
that's
thing for a
huge.
nomad.
Yeah,
Yeah,
that's
that's going to.
huge.
Yep,
Now I feel
yep.
like
I had
that
someone
that
tell me.
alone would kind of help you pay for your travel. So of course you're taking money, but at the same point in time, you're reducing your income as you
Yeah,
explore the world too. So I think that's a really big benefit in and of itself.
yeah, yeah.
And I think especially as you're kind of moving from place to place, are you paying and then deducting it? Are you using the business card? Is there a better way, one way or the other?
So because I'm an S corp, I have something called an accountable plan. So it's just like I'll pay it and then I kind of invoice my companies and be like, all right, you got to pay me this back. So that's the good thing about being an S corp. Like I said, there's a lot of little tricks involved when you change how you're taxed. So that's pretty much how I'll do it. I can write off, a portion of my travels, and then my business reimburses me, and then the business is actually able to deduct that. So it's a win-win for everybody. It's kind of like a wash, right? And one of the good things that you can do, like when you're considering traveling, like reach out to someone. If you have a business, like, hey, can I meet you here on such and such date? That way you actually have something planned that's for your business. And it's kind of a legitimate thing, right? Do emails, have text messages. All right, we're meeting here at such and such time. I'm coming to meet you. That way you have that paper trail.
I think that's a really good point. And then D asks, is there a minimum amount of money I have to make to write off your office expenses? So she'll have a dedicated room, but
Mhm.
is there anything else in terms of how much does she, so she has to make positive, so not negative dollars.
No,
Um,
no, that's the only the home office deduction is the only one that you can't write off, after you're in the negative. But the first couple of years you don't take a L unless you're like godly gifted, right? And more power to you. But yeah, you can write off the home office deduction. You're gonna write off your startup expenses, right? Getting incorporated, opening up that bank account, talking to an attorney, hiring a tax person, like all those things are gonna be in your first year, and you're gonna have a loss, and that's okay, but just make sure that you have the proof. That's what I tell people.
See, that's a big point. So document, document, document. Now, the other thing, a number of people are saying, okay, I'm not going to quit my job. I am looking for a remote job, or I already have found a remote job. And what I'm going to do instead is work my W 2 job in another country. So, what are some of the things to consider if they're working a US W 2 job and they're just going to hop on down to Mexico or Portugal or wherever else?
They just need to stay out more than 330 days because there's not much else they can write off. Like, I'm just being real. Like, if you just have a W-2 job, you don't, because they took away all that stuff in 2018, like where you can write off all these things. So I would just say try to stay outside the United States at least a year. You know what I mean? Then you can write off up to $120,000 on your W-2 income and get all that money back as a refund.
And so that would be big for somebody. If you make $120,000, they'll be
Hmm.
like, never mind, they'll give your money back. And that's pretty
Yeah.
nice.
Yeah.
And so, especially for those that if you have a business and you're working, you can then kind of mix some of those and get some deductions plus what you're already paying. Are there things to consider to say one is better than the other? So, if someone is working their W 2 job and they're like, I don't know, maybe I'm gonna take this side hustle and like make it my main thing. Is
Hmm.
there a breaking point to say, yeah, this is time. Cut your losses and go over there.
It's up to that person. It's really about like how much freedom do you want? Like there's a lot of us that are just like, this freedom is just priceless, right? I'm gonna leave this W-2 job and try this side hustle. Because if you think about it, if you move to someplace like Mexico or Colombia, the cost of living is so much cheaper. So your dollar goes so much further. So you don't have to work as hard. But you definitely just want to have a plan. Like what is your goal? What are your intentions?
Now, what are some of the mistakes that you see that people make? I'm sure by the time people come to you, they're like, oops, now fix me. So what are some of the bigger mistakes that you're seeing?
I think one of the biggest mistakes, and I don't fault the taxpayer, is they don't know what's on their tax return. So I will get people coming to me and I will review their tax return for a previous year. And I'm like, you went to school or you had a business? And do you do you know why you got a $10,000 refund? And they're like, nah, he just told me to sign. And I just signed. And I'm like, oh Lord. And this man had a full blown business. They took like a $70,000 loss, and he had no idea what was on his tax return. And I was just like, yeah, that's gonna be a problem. Like,
Oh
yeah,
my God.
all I can say is I pray that the IRS doesn't come back after you, because if they do, it's not going to be pretty, right? So that's one of the big mistakes. If you go to someone and they're like, well, I can promise you this type of return, like this type of refund, please
The
run.
posters that are on the side of the highway,
Please,
one kid
please run.
automatically, you're going to get $10,000.
Yep. Please run. I like for me, I want people to know what's on their tax return. You should have a basic idea of what's on your return. I'm not telling you to know taxes, but like, hey, sir, what is this line? What is this other business? And why is this number here? You need to know that. You want to make sure that that person signed your return. That's another thing. People come to me and I was like, this clearly says this person did this on freetaxreturn.com. And that you self prepared it. You didn't think that that was weird, and they're just like, nah, I gave them a portion of my refund, and now they can't find them. So little things like that, if they're audited, they're on their own. because you prepared your tax return. You don't even have anyone you can call and be like, hey, I need some help, because that person's long gone. So that's, to me, that's the biggest thing. People knowing what's on their tax return. And I know this is probably gonna spark something crazy, but like, the goal isn't to get a refund, y'all. It's really to break even and owe a little bit. And I'm gonna just leave it at that because I know that's gonna start. That's probably gonna cause some craziness right there.
Well, I mean, I get, because the bigger thing is a refund just simply means that Uncle Sam got a chance to hang on to your money, and they ain't even give you a little extra for hanging on to it. But if you owe, as long as you pay on time, you got a chance to hang on to Sam's money, and you don't have to
Right.
pay anything for hanging
Yeah.
on to that money. So it's kind of, who gets to have the interest free loan, either you or
Right.
the federal government. And so it's a good concept
Right.
to think about. And especially for people who get these large lump sums.
Hmm.
People are like $20,000. It's like $20,000.
Yeah, that's crazy.
Like, that is a mortgage every month. You're like, nah, you can hold it. Hold that for me. Hold that.
Yeah, it's a give and take. Like, I know people who, like, they'll file exempt half a year and then, claim zero the other half to kind of even it out. But you have to be really kind of programmed and strategic when it comes to that, and really just kind of figure it out, right? Because you put into the system, but you're fighting to get that back, right? Unless you like have a trump load of kids and you can itemize until kingdom come, like you're fighting to get your own money back.
I think that's a really good point. And CT said she's not loaning the government any free money. Listen, they done got more than enough for me. I'm right, y'all. There's a couple $100 check going about my business. Hopefully, it's not gonna be more than that. No, that is one thing too. So, if you are out of the country, is your deadline still April 15th?
Yeah, I am. So there's certain parts of, like, it depends on if you're a resident, right? So because there are different deadlines. There's a June the 15th deadline, but then there's some more paperwork that you got to put into that. Like for me, I'm like, let me just do April 15th or October 15th. I'm okay with that. Like,
And then, because I know you have offered your services for the ladies. And so and I have your link too. So some people might be saying, like, Dee, girl, you have one foot out the door, and you got your business started and so forth. And so as people are saying, what should I do? How should I get prepared? Is my stuff set up correctly? Are those questions that you'll be able to answer?
yes, I can definitely help this group with that, just to get them on the right path, set them up so that they're going the right way and not the wrong way.
Because I know you set up, and I just dropped the link. Let me see. Here we go. Yep. Just dropped the link in the chat for a 15-minute consultation. Now, I always say you get a 15-minute consultation. Don't be trying to make it 30. Don't be trying to make it an hour. Don't be saying I got one more question.
Don't worry, I got a timer. You got to
Hold
worry
on,
about
wait
that
before
one.
you hang up. So, how should people prepare? So they're like, all right, this call start at 4 o'clock. What do they need to have in their lap at 3:45?
At 3:45. So what it is, like, if they go into the calendar and book something, I ask a couple of questions. And then it's just like, what do you really want to talk about? Right. I'll know before we have that call so that we're both ready. Like, so whatever you're asking, be ready with that so that I can help you and we can go from there and make that 15 minutes, like, optimize that 15 minutes.
And then from a cost perspective, I know I asked you to quote the prices and not like that, but I think it is important, especially when people are out there and they're saying, I can do this on my own or I can do this for free. What are reasonable ranges? So if people are like, yeah, I'm gonna use this online software, whatever it might be, or free text, whatever. What's something to say, girl, you making too much to still be using this free little whatever?
Listen, I tell a business owner, as soon as they start to make some net income, you don't need to be on TurboTax no more. You don't need to be on the free software anymore, because I guarantee you there's some things that you're missing out on. Working with a tax professional saves you that headache if you get audited, right? If that person doesn't disappear on you, that is. But it saves you. You have that piece, like, okay, I got to look at the IRS. I need some help. You can call that person and they can help you with that. TurboTax ain't gonna do that. I don't know. Well, I don't know if they started because they're trying to do everything these days. But you really just want to have that human interaction, right? Someone who's going to kind of talk to you throughout the year, someone who's going to help you with that. And that can start at about $500. So would you rather pay someone $500 or risk doing it on your own and not knowing what's really going to happen? And like I said, the IRS can come back on you 3 to 5 years from now. And you trust me, you don't want that. I deal with a lot of people in those issues, and it's not a good look.
And I think one of the big things, so especially when you're just getting started, and so like Dee said, she's thinking about right now for supplies and all this stuff, and the expenses are adding up quicker than the money is. And
Hmm.
so people are trying to figure out what's free, what's cheap. And so, okay, we know maybe we'll do TurboTax in year one, and we need to be
Hmm.
ready to pivot. And then in terms of how we're tracking expenses,
Hmm.
some people are using the cute little, Excel document.
Excel.
I've done it. Done
We
it.
all have. We all have. We all started off that way.
I'm like tab 2 is 2019 and tab 3. And so what you say, all right, Excel might not be it. What are
Yeah.
some other options? So, everybody knows the QuickBooks, but what's something in between?
So there's FreshBooks. I believe that's like $15 a month. And then there's Wave Apps. That's the one I mentioned before. That's absolutely free. So that's the one I tell people to go to because it is so super friendly. That's what I use. Like it only gives you the cash flow, the balance sheet, profit and loss, super easy. Their customer services is easy. So that's the one I recommend
Now
because it's
say that
free.
again. That's Wave.
Yeah, like WAVEAPPS, Wave
Oh,
Apps.
okay. I gotta look that one up. I'm like, all
Yeah.
right. Free is right in my budget.
Right.
I
And you
gotta
can invoice people through it too. So it's just like it serves multiple purposes. So if you want someone to pay for your services, you can use Wave Apps to invoice people instead of having to use PayPal or Square or somewhere else.
And that's a really good point because as you leave the country and you're trying to get your money, some things are easier. So some people are relying on PayPal because PayPal is a little bit simpler and it goes from country to
Mhm.
country. But some
Mhm.
people, if you using the Cash App in the United States and then when you leave, they're like, I don't use Cash App. What are some payment methods or ways that you can receive payment, one that are more legitimate, but then
Mhm.
might be more accepted all over?
So Square. I think everyone. So Square is really good for that. Wave Apps is good. There's Stripe. I believe Stripe is like everywhere, and so those are like the type of services that you want to use, right? Because what you're doing is emailing that person that invoice. So it don't matter where you are. As long as they get that email and they can pay it, that's all that matters. Like I like them better than PayPal because PayPal has crazy fees because you'll get paid and then to take your own money, they want to charge you more money to take out that money after they've already charged you to receive that money.
To
I'm
get
like,
away.
yeah. I'm like, nah, I'm good off of you, PayPal.
And Dee said the console offer is a great offer. She just sold her first painting. So, girl, you making money. Go ahead and write off them supplies.
Yes. Congratulations.
But that's a really good point in terms of, are there things to think of? So D is selling actual physical product. Is there something that you
Mm.
should be thinking of if you're selling a physical product versus a virtual type product? So you're selling consultations and this tax strategy versus D. What are going to be some of the differences in terms of what you can deduct or things to be aware of?
Well, so she's going to have more inventory, right? So she's going to have cost of goods sold. So that's why she's really going to have to keep track of what she uses for business and what she uses for personal. That's the thing when it comes to having a physical product, just keeping track of it and how you use it. Like even if you give out samples, you have to be mindful of that. And that's going to go into your cost of goods sold, which is on that. It's going to be on the Schedule C, and it's also going to be on a corporation tax return. But that person whoever's helping you with your taxes will be able to let you know that. So that's why you really need, especially if you got a physical product, you need someone to help you with that.
Now, I think this is a really good thought going back even to as you're thinking about clients that you work with, and finally by the time you get them, they're like, yeah, they got me X number of thousands of dollars. Is it
Mm.
wise to go back and fix these things, or is it better to like just cross your fingers and hope?
I tell people, let's just cross your fingers, because if you open up a can of worms, it may get worse. And let's just say, like you said, this person got like a $20,000 refund. So if we're like, oh, this is wrong, I'm like, so are you ready to pay $25,000 to the IRS? Because it's 20,000 plus interest and
They
penalties.
like, wait, hold on.
Right.
Mean it.
Right. And so that opens you up to like more audits, because now they're going to look at you like, well, you did this before. Let me backtrack and see if you've done this again. So, the client that I had, I was just like, we're going to pray over this tax return and pray that they don't come back at you. And we're going to do everything right from this point on.
And that's a good point, because as you're looking, so one, to raise your hand and be like, I messed up in 2020, they're gonna be like, okay, let's see how many. But if
Exactly.
things are drastically different, so if you go from $20,000 return to owing $500, is that good or bad? Is that gonna say, hold on,
Well,
how
I mean,
you got
it,
that much and then something drastically changed?
it all depends on the year, right? Your circumstances. You could have lost your job and
Hmm.
you're only on unemployment. So it just depends on how similar those tax returns are. Because if it's like, well, you still made $200,000, but you don't have this $100,000 loss, like, so it may audit. It may trigger an audit. Like, it's not for me to say. It's just like it's a computer based thing. So it'll just kind of be like, oh, this is a red flag. So that's why I say, hey, let's just do things the right way. We're not gonna go back, but if they come back, we'll deal with it then. You know what I
Put
mean?
some more
Don't
money to
don't
the
help
side.
them. Yeah, let's not help them.
And then as you're thinking about just kind of over time, how you're planning and how you're strategizing and what are some of the most important things. So if you're thinking, all right, I probably gonna owe some money, how much time can you stretch that out? Do you need to pay that on April the 15th? Or can you
Mm-mm.
push that to October the 15th? Or do you
Well,
just
no,
not file? Which I know some people who were like, I owe and I just decide I won't.
no, please don't do that. Please always file, always take it head on, right? So you can do a payment plan for up to like 7 years, which I strongly do not recommend because it's daily interest and penalties. But if you know that you're gonna owe, just get it over with. File, and then like if you got to do chunks at a time to do that, right? So let's just say you owe $5,000 this year, and you're like, all right, I'm gonna pay y'all $75 until next year, and then you get a refund of like $4,000. They're gonna take that. So you can kind of plan it out like that. If you know you're gonna get a refund, just know that you're not gonna see that. They're gonna go ahead and take their money, and then you'll be okay. But I always tell people, just file, get it over with.
Just rip the band-aid off. Now, one of the things I definitely talk to a lot of ladies, because when we were talking about Jay last week, she still has her house. So some people decide they're going to keep their house. We talked to people who are like, I sold everything in this house, sold the
Mhm.
house. I can't remember who I was talking to the other day, and she was like, my house sold in like 2 days.
Oh
So
wow.
some people are like, they are selling their house. Some people are renting. Some people are Airbnb. What are some of the considerations? Because if you sell, of course, there's that lump sum of cash that you're sitting on, versus rental income versus Airbnb and that type of income. So what are some of the considerations if somebody is sitting and they're saying, okay, I'm sitting in this house today, which one should I do?
So do you want the headache of being an Airbnb, or do you want all your money up front? Because here's the thing: if you sell your main home and you make of a profit of less than $250,000, you're not taxed on that. So for me, if I was in that situation, I'd be like, let me get all these coins right now and be done with it. So it's what's your end game. Yes, real estate is increasing, but if you have an Airbnb, you remember you have to have someone to take care of that. Or if you're renting out the home, you need a property management company. So it all depends on how you want your money. Do you want it to come every month, or do you want it all upfront?
And then I guess repeat that, because I think that's the big thing. Of course, we know we're paying, you get the rent, you're paying taxes on the rent unless you can find enough stuff to write off. But if they sell that house and the house sells for $300,000, are they paying taxes on any of that $300,000?
It all depends on how much they bought the house for and all the expenses that they had while they lived in the home, right? So let's just say they bought the home for $200,000 and they sold it for $300,000, right? So that net is like only 100. They're not going to get taxed on that. So be mindful of that. Like how whatever you put into that home, keep track of that. Whatever you bought it for, keep track of all those expenses so that when you do sell it, you can see what you really made on it. Because they made it seem like when they give you that 1099-S that, oh yeah, you got 300 grand. And I'm like, no, I paid all of this other stuff. So and there's a lot of expenses that come into play, like your attorney's fees, your closing cost fees, all those things, so that you're not taxed on that lump sum when you get it.
And I think that's a really good point because, especially as people are trying to strategize. So, some people are already like, girl, I got rid of everything. I don't care. I'm gone. Some people have kept their home as a just in case I might return. Some people don't have anybody in it. They just like, listen, I don't know. I figured it out. But it's
Mhm.
always great to at least be able to run the numbers and figure out what
Yeah.
works best for you. I don't think it's necessarily a one size fits all. You might want to come back. You might want to come back and not stay with your mama. So you live around the corner.
Right.
You might want to keep your house.
Right.
So I ain't sleeping in that house again. And that's totally okay too. And so I think those are some of the things now, especially for people who are going back and forth. I know we talked about Bernadette, and Bernadette is down in Mexico as well. And she has been coming back and forth for conferences and so forth. So for people who leave, and so they're trying to hit that 330 days, but maybe they're coming back for conferences, for work events, whatever that is. So would those trips be something that they could deduct as well?
Yeah. Yeah. It's definitely deductible because she's going for a work trip or a business meeting. So keep track of all of that stuff.
So those are good things to be able to write off. Now, what are
Mhm.
things that people think they can write off, but they can't? So one is like the meals. I know the 100%.
Well,
Folks like, listen, I can't write off the 100% anymore.
um, I'm trying to think. Like for me, what was going around like maybe last year or the year before was everyone was saying like get a Benz, like write off a Benz, and I'm like, but you gotta have a
A
Benz,
big old
you gotta have Benz
SUV one
money,
too, not just a
right?
little.
Like I'm like, to me, I'm like, think about it. If you don't have the money to buy the car, why would you try to write it off? So that's the thing when it comes to like TikTok and all these other places, right? They give you all these things, but they give you bits and pieces of it. So I'm like, write off your Nissan Sentra. Let's start small, people, because you have that.
We got that. We can make that work.
You got that, right? So I think that's one of the things. It's hard when it comes to taxes because it all depends on what type of business you're in, because your expenses can be different from other people. Like I said, the makeup artist, she can write off all her makeup, right? She can write off certain shows. But like me as a tax person, I'm not writing off makeup. Like why would I do that? Like that's everyday living. That's not an ordinary expense for my business. It would be, my tax software. So it has to align with whatever you're doing in your business.
I think that's a good point. Yes, Bernadette is definitely awesome. We are definitely a Bernadette fan over here. And somebody said I have a receipt for every expense associated with their house. I think that's important. But I know when I bought my first house, like I signed them
Hmm.
documents and I was like, do I even need to keep these anymore? Can I shred these?
Yes, please scan them at least.
I know, but I was 22. I was like, ooh, that's like 50
Okay.
pages of documents. I should, unless I'm gonna give them to my mom or something. Like, what am I gonna do with all these?
Yeah. Well, the only sheets that you really need are the closing, the numbers, the number breakdowns. So all that other stuff is just
That whole
a lot
folder.
of right. You just need them two sheets of paper like that breaks down how much you paid and the seller and the buyer, because that'll be helpful when you do sell your home.
And then in terms of, I know for me especially, I feel like every time I turn around, somebody telling me I'm almost full of my storage. So where are some of the places to store these things? The shoebox obviously don't work. I've already had somebody tell me that don't bring the shoebox no more. And so the shoebox is bad. But where are places that you're not going to get like 50 alerts and say you need to pay another $100 a month to store all
You better
these documents?
well, you know what? I think Google Docs or Dropbox, all those places work, right? Just scan them and put them in the cloud somewhere. There's so many
Yeah, my
systems
Google
out
is at
there.
like 98%.
Oh, okay. So what I use something called Verifile, and they actually have a storage, and it's only $10 a month.
Oh, that's not bad. Okay. I'm gonna write that down. Y'all tell me if y'all buying something. If y'all buying some storage, because I need people to all these apps to quit saying you need some more. This is a good question. If I buy a plane ticket with your personal airline credit card for a business trip, should I just invoice your business to reimburse her? So she's saying she has a personal card. She don't use a personal
Mhm,
card to buy a ticket somewhere, but
mhm.
it's for work. And so she's saying she doesn't have an airline credit card for the business. So, you want your points, you want your miles, you want all of the
Yeah.
upgrades and benefits. How do you go about doing that and making it work?
So you have to keep like a track record of it. So, like she said, if it's for work, have that who, what, when, where, why, right? I use my personal credit card for this, but it was for business. So then that way, you have it in that Excel sheet. You spent $500 on such and such date for such and such work conference, and then you can write it off on your taxes. Because it depends on how you're structured, if you're going to do an accountable plan or not. Only like S corps have an accountable plan. So as a just an LLC, you're just keeping track of it, and then you can write it off.
And that's a good question. So, especially if we're going to try and get us a little trip in. So, if we're going to take a trip, let's say we leave on the 1st, we coming back on the 30th, but we got 2 or 3 meetings in between. Can we write off the whole plane ticket? Maybe not all of the hotel days, but you did do work while we were there. Can we do the whole or get reimbursed for the whole plane ticket?
You can try. So there, that's a funny. So that one's kind of iffy, right? You can probably do the plane ticket there. It really all depends on how you structure your meetings. Like I would say, like I try to tell people, pack as many meetings as you can. You know what I mean? To make it look legitimate. That way you can write off the ticket to and from. But if you're only working 2 days out of 30 days, now you pushing it. So
So you're gonna have to get some more folks, go run it back, be like, I need to see you again before I leave.
listen, or have a business meeting every day with somebody, so you can at least write off that meal or something else if you can't write off the airfare.
Yeah, so definitely take some time. Our girl Shar, who's in Portugal as well, check out her Expat app. Maybe just ask, y'all want to hang out?
Yeah,
Can we do coffee and talk business or something?
listen.
It's a whole bunch of folks there too, and I think that's
Yeah.
that's some of the creative ways to just make things happen,
Hmm.
especially if you're trying. So if you're in a situation where you're making a little bit of money, you definitely don't want to spend all your money that you're making on taxes, but you want to be able to see the world at the same time. I think that
Right.
is a big time way to kind of make it happen. So
Yeah.
yeah, Black says Shar is my girl. Indeed. Yeah. I think Shar's interview is like probably at least a year or so old. It has to be a couple years old, almost at this point in time. Because I said, Shar, I'm gonna come see you, and I think she was laughing at me like, "No, you ain't." I was like, "Girl, what you doing next week?"
Oh, so you went. So you did go. Oh, that's so
Like, girl, what you
cool.
doing? You gonna be in town next week? Because I'm being town next
Wow. You weren't playing. I'm like,
week.
I'm gonna give you at least a month. Let me figure out my life first.
Nah, it was in me. I just felt like leaving. But that's one thing. I was like, girl, hey, I should have thought about that. I could have been like, girl, let's do this interview here. Why are we sitting here?
Well, now you know. You can
Let's
always
do
go
it
back and do
again.
it again.
Let's
There
do
you go. There you go.
it again. So I think that's a really big point in terms of how you're structuring things and how you're finding things. Because can you even use like networking events as a work meeting during those trips?
Yeah. Yeah, like when they have these meetups here, like, because think about it, you're there talking about like your travels, your business, what you do. Yeah, this is a business meal write off. Like, and what I tell people, I rather you have more categories than less, right? Don't just put meals. Like put networking meals, put like one-on-one meals, put client meals, so that it's broken down, so that it's not a huge number, and it's looks like, well, dang, did you eat out every day? Like, and who did you talk to every
I
day?
guess I ate out
Yeah.
every.
Well, you just like I said, you want to cover your back. You want to make it make sense. You don't want any red flags. When people come to me with these huge numbers, I'm like, I need you to break that down. There's got to be like 5 categories in this number.
And I think that's a good point in terms of multiple categories in terms of meals. Would it be multiple categories even in terms of transportation or in terms of things like lodging? What
Yeah.
Okay.
Like for me, I put Uber or I'll put Didi or I'll put, just regular transportation. That's how I do it. And then I'll have airfare and then I'll have travel insurance. Like I have so many categories. It's ridiculous. But I rather have more than less.
And that's a good, so the travel insurance, I wouldn't even think about that. So especially for people, what about the folks who pay for like an annual plan? So if you pay for an annual travel plan, but maybe you're only traveling 5 or 6 times a year, or maybe just half the year. So like Dee is going to be gone in a couple months. So she'll be gone for like half the year. So if she buys an annual plan, but
Mhm.
she's doing business abroad, would that also be something that she could write off?
Yeah, yeah, that one you can kind of get away with because it's not going to be too crazy, right? So, I'm sure. Well, I don't know what an annual plan looks like, but yeah, you can definitely have the travel insurance because you'll have the airfare to back it up. You'll have where your lodging is to back it up. You were actually out in the world.
It's not that expensive, y'all. Make sure y'all get that.
Okay.
I got pictures in a cast in Morocco to prove that you should definitely
Oh.
get some travel insurance.
Ooh. Well, who
So
do you go through? That's the thing. Like, I don't even like. I was
I don't
using
want to name
Safety
no names because
Wing.
ain't nobody endorsing it. But
Okay.
I will say you can Google it, and there are a number, and it all depends on how often you're going. If you're only going like on one vacation a year, but if you are going and you're doing 5 or 6, 7 trips a year, and you're gonna be gone a few
Mm.
weeks, it makes sense just to do an annual plan. I want to say my most recent annual plan was like $198. So like,
You need to
yeah.
share that info because that's not
I'll
that's
send it to you later.
yeah. Because I'm
But
like that's not the quotes I was getting.
and there are some that you can pay for. So let's say you're just going to take one trip, but it's going to be like a 2 or 3 week trip. I've done them where you're just paying for that period. So you
Right.
literally put the start and the end date.
Right.
But as you go out longer, they're going to ask about, are you staying somewhere? And they typically will give you like a breakdown of you need to be in the state certain amount of days versus out of the state. So it's almost going to be opposite.
Oh.
And so they're going to cover you that way. So there's some of those too. Um,
Okay. Hmm.
and so she said, and if I'm out of the country for business, that doesn't count against the FEIE time out of the country. And so I'm guessing, is that a question? Because Dee, you might have to give us a little explanation on that. So she's
Yeah.
saying, so she's going to be down in Mexico. If she comes back to the States for business, is that counting against her 330 days?
Yeah,
Or
because you have to be outside the United States for 330 days in order to get that credit, the
so Dee, you'll have to,
exclusion.
fly to another country for business, just stay out
Right.
of the United
Yeah.
States.
But the
Um,
good thing is she can write that off, right? Because she's going back to the States for business. So she can write off that travel.
so that's
So
perfect.
there's a couple of ways around this.
So there's a few different ways. And Natasha, she says, is this being recorded? It is, girl. You can come on over to YouTube. Make sure you check it out there, and you'll be able to see the entire thing as well. So if you were just hopping on a few minutes ago, don't worry about that. You could see the whole thing, and definitely as you're strategizing and planning. I know she is doing some hop arounds too. And actually, we were talking not too long ago. I know she is doing some house sitting, thanks to our girl
Yeah.
Stephanie Perry. And
Yeah.
so, what are some expenses? Because I know I have house set a few times. It ain't really no expenses. Like I just had to get there.
I mean, I guess it'll be like just the average expenses, like your transportation, your cell phone, little things to work your business, right? If you're going to a co-working, just things outside of the house. That's the only thing
I know
that
that's
you
why I'm
can't
like,
write
what
off.
did I pay for? I didn't pay for
Right. Yeah.
nobody. I
Definitely
paid
your
for that. I
flight.
had the
So,
best first house sit ever. And they left me groceries and a little bit of spending cash. I was like,
ooh, where did you go? They still looking
in
somewhere?
Mexico. And they said they chose me because I was black and I didn't have a lot of ratings and they knew I needed it. And I was like, way to look
Oh,
out.
that's so nice.
So way to look out. So if anybody wants to sit, they are in Tijuana. So that was my first house
Ooh.
sit in Tijuana. It was nice. It was nice.
Oh,
Like
okay. I was like, "Dude,
it was
what?"
nice, and it was great, and they were great, and they even picked me up from the airport and everything. So
Oh,
yeah, so
wow,
definitely.
that is awesome.
So I was like, I didn't spend nothing. Like I didn't spend a
That's what's
dime.
up.
She actually took
Mm.
me by and got some burgers on the way back to the airport.
Man, you had an amazing host.
I don't think I had a bill at all. So
Yeah.
yeah, that was no bill. But I guess you can always find something, maybe food in the airport or something.
Yeah.
Try to make
Yeah. That's what I was going to say. Find something.
try to make something. So once again, the link is in the chat. I will throw the link in there one more time. That link is so you can get 15 minutes, not 30, not 45, not 15 minutes. So we want to come ready. I think that's the biggest thing. So come ready. So when you show up to your 15 minutes, you're filling out some information to prepare. But when you show up, know where you're going. Know what are your top concerns. Have your tax return in front of you if you can, so you can answer some questions and so forth. So I think that's the best way to get them. Oh, this is a great one. So Natasha says, can she write off a portion of her exploratory travel since she's a travel agent?
Oh yeah, I think travel agents write off all they travel.
Girl, sound like fun.
Yeah, yeah, she can. She can. I know a lot of travel agents. That's what they do. Because y'all have they have these conferences and these places that are like, hey, come, sell this, see this. So yeah, you can write that off.
So that's a big one. So Natasha, your whole little trip
Yeah.
is a business expense.
Well, I need to be a travel agent if
She
that's the
said she
case.
already got her browser open on the page. She ready. And this link, so I don't know what day y'all watching this. We are doing this on March the 6th, 2023. The link ain't gonna be open forever. It's 2 months.
Yeah. Then I'm
2
going
months. So
take
if
a little
y'all
bit of
still
time
thinking,
off.
don't don't overthink it. Don't be like, I'm still trying to pull my shoebox of paperwork out. The
Ooh.
link, 2 months. That's it. It's gonna be gone. So get your questions in and don't be afraid to invest in your future, especially if it can save you. I mean, just some of the thoughts and the questions that we've gone over tonight. I mean, you think about Natasha, now she got a whole trip that she gonna write off. And Dee is writing off all her art supplies. And so just
Yes.
knowing that you can put some of these things together, and as you're putting together your meetings, I'm, look back, I'm like, maybe I did talk to somebody about business when I was, see if I write some stuff on. And those are some of the big things. And so definitely drop any of your last minute questions in here as well. I want to give Sandra a moment to just give some closing remarks. And I want to thank you all for being here today.
Oh wow, closing remarks. Okay, it's like a speech right now. I mean, for me, the biggest thing is I love working with women that look like me, and we don't get enough help when it comes to taxes. No shade against the others, but like we need more than just tax prep help. We need help all throughout the year. You need to know all the things you can write off. You need to be able to talk to the person who's helping you. I have quite a few people that I know that have CPAs, and it's just like I just give him the paperwork. He prepares it. He invoices me, and then I see him next year, and I'm like, "But he ain't tell you nothing. Like he ain't even at least tell you what you owe. Like there should be a little bit more dialogue." So that's my biggest thing. And for people who actually get on a call with me, I will have like a cheat sheet for you, everything that I could possibly think of that you could write off. So then that way you have somewhere to start, and it's a lot of stuff. So you just be amazed of the things that you can write off.
I love it. Natasha says, thank you. This is so required. It so is, because even though you leave, Uncle Sam like, hey, don't forget about me.
Yeah.
I'm over here. I'm still over here.
Yeah.
I'm listening. I'm waiting. And I want to thank you for being here, because as you're strategizing, there are so many aspects to, getting rid of all your stuff. If you're going to move, what it's going to look like, even if you're just taking a year off. If you strategize that year right, you be like, I'm gonna start my year off January opposed to June. You might be able to hit that just in that 1 year.
Yeah.
And then you're like, oh, this wasn't such a bad year.
Yeah.
And so those are things, and especially I always say plan in advance as much as you potentially can. And so, Tammy just asked, she said she doesn't own a business. Do you do individual tax returns? So she said she might do that.
I do.
So click on the link, Tammy. Go. Click on the link. Dropped it in there. Let me drop it in there again for you, Tammy. Let me make sure you got it. There you go. Get your 15 minutes. Go ahead and schedule that, because it's so important as we're planning. And the last thing we want to do is make a costly mistake. And when we
Mm-hmm.
make tax mistakes, they don't be like, "Oh, you got that wrong. Let me send you some money back." And I'm like, "Sorry,
Yeah.
sorry, that ain't
It's
my problem."
it's not fun, y'all. Like I remember when I got my first happy gram is what I called it. Like I wasn't expecting it. It was like $2,500, and I was like, "What is this for?" Like I legitimately had to ask my mentor. I was like, "What the hell is this?" He's like, "Oh, well, you owe because of this." I was like, "Why you didn't tell me that when I first started?" Like I
Like,
would have
yeah,
found some more deductions, or I would have changed, like, or I wouldn't have reported some stuff. Like, you ain't hear me say
just
that, but
something.
like,
Yeah, would have drove around some more or something.
yeah, you set me up for the okey doke. And he was just like, well, it's good for you to learn. And I was like, oh, okay, sure. So
And
from
the
that
more you
point
make,
on,
the more you
I
pay.
was,
So,
yeah, I was like, oh no, we gonna find ways. Like if I'm gonna owe the IRS $2,500, I am going to know I owe them $2,500. It's not gonna be a surprise.
and that's the thing. We want less surprises, more planning, but don't over plan.
Yeah.
Depending on your personality, you probably been thinking about this, planning this for like 10 years. And I know somebody, I think I was in a group and she was like, yeah, I've been thinking about this 10 years. We're gonna do some
Pull the trigger.
action, even if it's
Yeah.
just some longer vacations or whatever it is. We're gonna put some things in motion so you get closer to your goal. So
Yeah.
I want to thank you so much for being here. Thank you for everyone who joined. Hopefully, you all hit the subscribe button, like and share with all of your friends. And I definitely hope to see you all next week. We have another great speaker. I'm excited about this one as well. And so until then, I want you to have a
Mhm.
great night. Thank
Bye,
you.
guys.